Hi everyone, my name is Hunter Coyle. I am going to be the president of DCM for the 2023-2024 school year. So this video is just going to be a little bit of a recap of the summer to catch everyone up to date on what's been going on with the club and with the portfolio. With me I have Josh and Sam, our portfolio manager and economic analyst, and so let's hop into it. So one of the things that I did this summer was look into some financial software for the club to use. In the past, we relied heavily on Value Line and Yahoo Finance on getting different financial statements from, which was a little bit inefficient. And talking with some investors in the field, it sounded like they were kind of looking for new grads to have experience with financial software like Bloomberg or CapIQ. And this one was something that was affordable to the club and had pretty much all the same features. So not only is this going to help make our stock analysis more efficient, but it should also help give our students the skills that some employers are looking for. So here's a screenshot. This just shows what some of the financial statements look like, and this can just be copy and pasted into an Excel document just to make that process a lot faster. And then it just has a bunch of different tools that not anyone in the club has fully explored yet, but we're looking forward to doing once we get into a lot more of our stock analysis. And then another thing that I got feedback on from the club was that underclassmen weren't getting as involved in the club as they wanted to, and not until they were senior analysts, which had to be their junior year at the earliest, were they able to really have a big involvement in the club. And so there were two things that I kind of saw that would really help them develop their skills investing and getting more involved in the club. So the first thing is working with senior analysts hand in hand when they're doing their stock analysis or creating stock pitch presentations. So we sent out a survey, and just about all of the junior analysts wanted to get involved in things like this. So we'll be setting that up as we start doing our stock presentations this school year. And then another thing, just some workshops to help them sharpen their skills, doing things like helping them better understand financial statements, building different financial models, and stuff like that that they can maybe put on the resume or help promote them as a potential job candidate. So with that, I'll hand it over to Sam, and he can talk about how the economy has done this year and how that's affecting our club.
Yeah, thank you. So I'm sort of just going to be going over what we went over with the club in these first few weeks. The main thing I was looking to do in these at least first few meetings, was kind of give the club a grasp on how the overall economy is going to affect the changes, whether it be in the Fed or the changes that happen with interest rates, and all those sorts of things affect our club's stock performance. And that way we sort of have a lens that we can look through in every presentation. That's sort of maybe my goal through the role I'm serving as this year as the economist. So with that, I kind of started just by defining, a few of the terms that a lot of the guys will hear throughout the year, with inflation and unemployment and GDP growth, where that's been at, what that did to the club last year for the returners, and also just the way that that is going to continue to affect our club moving forward. With inflation being down, last year we bought a lot of more recession-proof stocks as a philosophy. So this year we're looking to potentially grow, potentially gauge more if there is a potential recession. So just kind of with that lens, looking at everything. So I just kind of went over like how the Fed funds rate does affect the market, because that's going to be something that I probably present on almost every week, with inflation potentially going down still. But the Fed's target rate is 2%. So if it doesn't calm all the way down, they'll maybe raise rates again, probably hold, whatever that may be. I just kind of wanted to show the club there's a lot of uncertainty out there. And basically define what that was, because last year a lot of guys potentially didn't really know what the Fed funds rate did and how that really affects the market as a whole. And so now having this lens on before we go into a stock presentation every week, beyond just knowing the numbers of an individual company, I feel like is beneficial. Just kind of just went over why that's important, what's the Fed's main goals with interest rate beyond just purely what they are. I think understanding the human aspect of it, what the goals are, that's something that's very beneficial for all the guys in the club to understand. Kind of went over what the federal funds rate's been at, how it combats inflation, and went over what the S&P did, which it's up 18% year to date, but this is mostly making up losses from last year. And then obviously there's still tensions in Ukraine and China. Basically, once again, showing the club there's a lot of uncertainty. A lot of people might think we're going into a bull market, or some still think we're going into a bear market. So just showing the club it's not really one way or the other. We're never going to have a stock where we're like, we're 100% going to win in this no matter what. Let's throw all our money into it. Kind of giving the younger guys who might be excited because it's their first opportunity to really, see what happens with large amounts of money in a club, just so show there's a lot of uncertainty out there. And we got to make, careful and planned out decisions because that's just the way the market works. Kind of went over this chart, with the way the Fed funds rate has tended to affect recessions in the past, why people think that might exist, why that was sort of our philosophy last year as a club. We bought a lot of recession-proof stocks. So I know when Josh gets to his report, you'll see that we ended up losing to the S&P over the summer. It's because mainly, the tech stocks did really well over the summer, where a lot of our recession-proof utility companies aren't going to grow as much with such a low beta that we have. But that's kind of been our club's philosophy. So I just kind of wanted to highlight with this a very actionable way that our club has worked in the past. And kind of moving forward, just for the rest of the club to understand, we're really going to be going through the lens of, we want to steward all the resources that we're blessed with. And so just kind of throwing them at anything without really understanding how the market's working as a whole is not something we want to be able to do. So there's a lot of uncertainty out there, but I felt like that was really good for the club to understand. I think we got some good feedback from a lot of the guys who was their first time coming, that they felt prepared then to go into, stock presentations, having the knowledge of the way that the market works as a whole. So with that, Josh will talk about our performance this summer.
Okay. So let's get into it. I'm the portfolio manager this year for the club, and manage the portfolio, give the statistics, and give an update on each meeting. So the portfolio did really well over the summer. So at the beginning of 2023, most people thought there was going to be a recession in 2023. And as a club, we were a little bit more conservative in our stock buying. We decided to pick more conservative companies over tech and AI. And this summer, we still did well. We went up 5.73%, and we're now sitting above $1 million. But we did lag the S&P 500 by about 2.5%. So they made a little over 8%. We were around 5.73. And so we look to continue doing well in the future. Looking at a few of our biggest movers over the summer, we had Nike really struggled this summer due to slow consumer recovery in China and less sales than expected in America, leading to lots of excess inventory. Over the summer, they haven't been selling as much as they want, and so they just have shoes sitting around not making them money. Disney, on the other hand, fell to their lowest level in nine years in the past couple weeks. This is kind of a combination of poor earnings from movie properties combined with really Disney Plus not earning positive income yet, and a little bit of decreasing sentiment from fans. But on the other hand, this kind of spring and summer was really the rise of AI technologies, as AI really just shot up growth overall for our portfolio and the market in general. Our biggest beneficiary of that was Adobe. Adobe introduced it into a lot of their products and saved time and money, and it's really beneficial. And they had a 17% increase in June, and they've just kept going up over the summer. Digital Realty Trust is another of our companies. It's a data center real estate company. They also rode the AI boom as well this summer, helping our portfolio. Next, I wanted to look at our top 5 holdings currently. Over the summer, we had a number of changes in our top 5 holdings. Apple has been our largest holding for a while now, and they've stayed at that point, having about 9% of our portfolio. Alphabet and Adobe, they both kind of rode this AI boom as Adobe actually went up from 3.8% of our portfolio to about 5.5%, and Google went up a couple percentage points, a percentage point and a half about as well. Amazon also benefited, and AbbVie still stayed in the top 5 even though they kind of decreased slightly. So next we'll hear from Hunter for our final.
Yep, so thank you guys for tuning in. We're really excited to see how this school year goes. It'll be interesting with the economy to see how that all shapes out, but I definitely see a lot of opportunity for all our club members to really grow in their investment skills. So thank you.